Sorry. Hi everyone, thank you for attending it super on time. Slightly 2 minutes late due to some technical difficulties. It would be great if you guys can let me know if you can hear me clearly as well as see me clearly. You guys can type in the Q&A chat or the chat box, either one that is working for you. Let's just hold on for a couple more minutes before we begin for all the attendees to actually come streaming in, all right? Okay, so chat box is these enable. I think we recently keep having this same issue. So you guys can actually type your answers or questions in the Q&A box. All right. Okay, so let's begin with today's risk management. So these are some of the agenda. We are looking at what is risk management, what is leverage, what is related to margin, how much risk should we allocate to each trade, and how many pips should your stop loss and take profit be, and what is a healthy risk to reward to have. So actually, just post a question out there. How many of you guys actually know the concept of leverage very, very well? Or how much you know about it, and or you absolutely have no idea what it is? You can please type out on the Q&A so we will know how to go about this webinar with you guys. And after this actual presentation, we will be doing live analysis where we'll be using stop loss and take profit in terms where depending on personal preference as well. So I will show you guys how I choose my take profit as well as stop loss. All right, so it'd be great if you guys can answer, and we'll see how fast along we can move on with this educational part, right? Okay, so let's go on to the disclaimer. We're looking at, please take 1 to 2 minutes to actually read the disclaimer on the screen. All right, so just to sum it up, this whole webinar will be actually based on my personal POV as well as our personal trading preferences. All right, so any analysis, any information in these slides is actually purely educational. They are not meant to be treated as trade advice. All right, so just me apart, let's meet some of our team. So you can see our boss Desmond, then we have Yong Jin and also Jin Tao. So probably you guys already seen them in the Vantage webinar before. All right, so I'm Kaylene. You guys can just feel free to actually type your questions and any comments you have in the Q&A section, so as to help us out, help me out actually to understand what are your concerns and what do you understand and what do you not understand from this webinar. So it'd be great if we can make this webinar as interactive as possible. All right, so let's look at our first agenda. What is risk management? So risk management is actually a set of rules that governs the trader's actions to protect against a downside of the trade. I bet all of you traders already know what is this. All right, so basically just a guideline for yourself to actually not put too much of your portfolio on risk. All right, so risk is the opposite of reward, obviously. So when you're analyzing a trade, you should consider at which point is your analysis considered incorrect. So normally when we identify the point, we put a stop loss at that point where we will admit where, if price actually ends up at that area, we will think that actually our analysis is invalid already. And how much would you lose at that stop loss point? And what is the appropriate size of your trade? So some tools for effective risk management will be leverage and margin, stop loss and take profit, and risk to reward ratios. Okay, so let's look at this. So what is leverage? So leverage is just the ability to control a large amount of money using very little of your own. So basically risking very little of your own capital and being able to participate in a much larger trade. So enter a position that is way more valuable than the amount of money you have in your account. So let's just say, obviously one side when you use leverage, you are be able to actually gain a lot more if your analysis is right. Obviously, if your analysis is wrong, it will come back to you as twice or thrice for whatever you're losing as well. So leverage is something to be taken care of. All right, so let's just say the capital amount is at $10,000 and we're looking at leverage is in ratio of 1:20. So you are looking at 10,000 controlling the position of 200,000. Okay, that is a maximum trade lot size at 2 standard lots. All right, and then we are looking at 10 pip move in profit will allow you to gain $200 just from 200,000 position. All right, and then we are looking at the second type of ratio, looking at 1:100, looking at controlling position of 1 million, which is 10 standard lots, which 10 pip movement will allow in the correct direction of your analysis will allow you to gain $1,000, and 1:500. 5 million, 50 standard lots, 5,000 gain. All right. However, same context, if 10 pip move in the opposite of your analysis, we're looking at $200, $1,000, and $5,000. So this will be 2% of your portfolio. That seems pretty okay. 10%, a bit cutting it. However, 50% is the real burner. So when you're using the leverage of 1:500, it is something to be aware of. All right. Ideal leverage to have. So remember that leverage is a double-edged sword. All right, day trading normally frequent trades with smaller stop loss. All right, so higher leverage 1:100 enable a bigger lot size. So day trading normally we put our stop loss to a much closer price point to our buy or sell entry, right? So we are able to take a higher leverage to enable a much bigger lot size as our stop loss is very close. So even if we get stopped out or the analysis move in the different direction than we actually want them to, then we will be looking at a small risk for a big reward. All right, something of that sort. And then, however, if you are swing trading, fewer trades will take a wider stop loss. Obviously, when you're doing swing trading, you are more prone to high fluctuations in the trade. All right, much more price movement. You will allow your price or your analysis to have a bit more breathing space. So you tend to have wider stop loss, and it is more advisable to have lower leverage for lower lot sizes. All right, so I mean, this is personal risk to reward preference. All right, so do some calculations and also define what kind of a trader you are. So how is this related to margin? So margin is the amount of money that the trader need to put forward to open a trade. So margin level equals to equity divided by use margin times 100%. All right, so just for example, we are using 1:100 leverage ratio yields at a margin percentage of 1 divided by 100, looking at 1%. All right, so we are buying 100,000 euros with a current price of 1.04 USD with a 1% margin. So the required margin will be 100,000 times 1.04 USD times 1%, giving you 1,400. And that will result in 714% margin level. Okay, so this how does this percentage actually work? All right, so you guys can see the calculation here and how does that relate to your account. So when you're using margin, you can look at margin call level. So when margin actually falls to 100%, then we are unable to open any more trades within the same account. So margin call will actually happen where equity falls below 100% for the required margin. You would have to deposit more cash to sustain the position, and stop out will actually free the margin where it falls below 50% of the required, and position will be closed immediately. All right, so I believe all of you actually know what a margin call is, stop out, and etc. So we will not deep dive into it. So how much risk should we allocate to a trade that it is appropriate, right? So normally we will always try to smallen the percentage of your total capital that is in risk. So typically people will say that, oh, you should keep your risk in 2% of your capital, which sounds very safe and very small bet. All right. However, it really does depend on your experience level and trading style. So like what I said, if you are a swing trader, highly likely if your stop loss is way further, there's a chance where your actual risk allocated to this trade might be way more than 2%. All right, so let's take a look. So let's just say, for example, with a risk comparison to a $10,000 account, we are looking at, for example, 1 to 5 trades. So let's just take the first one. So we are looking at one trade at 2% risk, that will be risking $200, and 5% obviously $500, so on and so forth. However, we are looking at a 2% risk at average of 184, and 5% risk at $407 at 5 trades. Okay, so in total, we are looking at $961 that were put in of about 10%. And then in total for 5%, you're actually risking 23% if you are making 5 trades. Okay, so what is the ideal percent per trade? Right, so normally we did say that, oh, it's 1:3%. However, it does depend on what type of trader you are and what kind of experience you are in. All right, so let's just say in the Russian roulette, you have $1,000 to bet on black to win is about 48% chance to win because there are 18 black. How much would you bet? All right, let's take a look. All right, so how much would you bet risking 48%. I mean, with the probability of 48%. Okay, that's a question for you guys to think about. And then if we have 32 black and 4 red and 1 green, and you have $1,000 to bet on black to win, and 86% chance of betting, how much would you bet? So basically, we are taking the probability multiplied by the capital, divided by the capital. So we will know that how much money betting is appropriate to actually gain from the 86% and how much risk you're actually involving your $1,000 capital into. All right, so let's move on to pips now. So how many pips should your stop loss and take profit be? Okay, so ideal lot size, 0.1, 0.3, or 1 lot. Okay, so we are looking at how lot size actually affects your stop loss and also affects your pips. So in this case, we are looking at a 50 pip stop loss and a 90 pips take profit. Normally, I wouldn't say this is a very good thing. It's about 1:2. So we are putting 1 ratio against 2 for profit. So normally we will consider if 1:3 actually will look much better and would actually capture your risk to reward way better. Okay, but for interest of the example, let's take a look. Account size, we are looking at 50,000. We are looking at currency pair of Kiwi dollar. 1% of your account is 500, and then 2%, 3% obviously is 1.5. Okay, so let's look at it. So 50 pip stop loss, so 0.1 lot is $50. 1 lot would risk you $500. Okay, so 50 pips, if it's 0.1 lot, it's $50 you lost. And if you're in for 1 lot, it is $500. So obviously the lot size will definitely affect how far your stop loss is. So for example, if your stop loss is even closer, you could go in with higher lot size, right? Because your stop loss would actually allow you to cut down your risk of losing more of your capital. So in this case, 50 pips seems okay, right? Because 50 pips, 1 lot will only risk 1% of account. So normally, typically, we are saying based on theory, 2% is the best stop loss amount, or 2% is best thing to risk per trade, etc. So looking at it, 50 pips stop loss looks perfectly fine and 1 lot size looks okay. However, if you are so determined in going to 2 lots, in fact for 3 lots, obviously 50 pips is not going to cut it, because 3 lots will actually reach 3% of our account at 50 pips. All right. Yeah, so you can see the connection over here. All right, so this is a very simple ideology, so you guys can take note. So I would say lot size really do matter. However, normally people do analysis first and then you decide the lot size, okay? But some people are more determined on how much lot size they want to put in this. So you also have to adjust your stop loss or your analysis before going into your trade. Okay, so we can look at 20 pips and 36 pips take profit. Okay, so we are also looking at risk to reward of your trade. Okay, so you can tell people that, oh, I actually did a very good analysis. I gained 36 pips and everything. However, you are risking 20 pips just to get 36 pips. All right, that is not the best kind of risk to reward ratio we are looking at. Okay, typically a good or above average risk to reward we are looking at is normally 1:3. 1:3. So you're risking 1 part for 3. All right, that seems a bit better than 1:1 point something. All right. So stop loss and take profit placement. Okay, rather than considering stop loss and take profit levels as fixed pips amounts, okay, stop loss and take profits level should be placed on technical levels on charts. So for example, your high highs, your lower lows, your resistance and support. All right, so just counting on pips or just based it on pips might allow you to actually not look out for some technical or important price action levels. So actually those price action levels might allow you to have a better analysis and better viewpoint of the entire trade. All right. Okay, so we are looking at a take profit before. Okay, sorry, stop loss beyond and take profit before. All right, so look at the first top part where there is a major resistance area and the red color line equals to stop loss. So the reason why we want to put stop loss beyond the major price action level, just slightly beyond, is to allow price to actually have time to actually react to our analysis and have some breathing space before it directly gets stopped out at the resistance area. Because we are looking at the price to, and we are suspecting price to actually react at the resistance area for a down, for example, for a sell, right? So can't be when price actually reaches a resistance area about to come down and you got stopped out, because that doesn't make your analysis wrong, but it makes your stop loss something that actually stop your analysis from playing off. However, we look at the bottom, sorry, this is typo, should be major support area. All right, we can see the green color stating as take profit before. So the reason why we take profit before is that there is a chance where the analysis or the price might not be able to go all the way down to the major support area that we're looking at. There's a chance where price would actually, or the market actually exit earlier, and allowing you to actually fail to take profit at the most critical time. So normally we'll shift it slightly above the major support area. So what is a healthy risk to reward to have? Okay, so 1:2 is at least, so a better and above average, like I said, it will be 1:3. All right, so risk to reward ratios help investors manage their risk of losing money from a series of bad trades. It is essential for traders to identify positive risk to reward. All right, so I believe for all the traders here, you guys have an amazing risk to reward ratio. Or if you guys have never ever thought about looking into that, do advise yourself that next time when you're carrying out analysis, do take that into consideration. Okay, it might change your style of viewing the chart. It might actually help you become a better trader. It might also allow yourself to have a better stop loss and take profit, right? All right. Okay, so however, fixed risk to reward could pose a hurdle for most traders. Something to consider in addition to risk to reward is the winning rate. All right, however, so for example, if you want to put a stop loss at the peak, actually, I'm not sure. Okay, so if you want to put a stop loss at the peak area, you're saying that, oh, you're looking at this big amount. However, you could have wanted to actually go beyond this point and actually highly likely build a support over here. Instead, because you want 1:2, you're moving all the way down your target to all the way to the bottom, which is a very far back support level, which you are not sure whether analysis can stand. So of course, risk to reward, it really depends on what you are looking at. So in this case, do not be super fixated on 1:2. However, if it's me, I personally will have put it way closer, put the stop loss way closer and keep the trade short. All right. So however, I feel that if you are unable to see a good amount of risk to reward in this trade, it might not be the best trade to take. All right. Okay, so we are looking at trading strategy win rate. So we are looking at 80% risk to reward ratio at 0.25. Okay, so 1:0.25. 1:1, 1:1.5. Okay, 1:0.25, obviously the win rate strategy is very high, but however, that doesn't make technical sense, right? For you guys to risk so much just for 0.25 and so on and so forth. All right, so we are looking at a 40% win rate. However, it will be great if you guys are able to identify a pattern or whichever type of way actually help you guys in terms of the preserving of the capital. All right, so we have come to the end of the slideshow. However, we will be doing a live analysis right now. All right, so it'll be great if you guys can pitch in your own personal analysis. Oh, sorry. Pitch in your own personal pairs that you want me to analyze, then we will be able to analyze it together in this webinar. All right. For the next 30 minutes, let me just share my screen over. Okay, do let me know if you guys can see my chart. Okay, so how about let me start the ball rolling. Let's look at, oops, sorry. Dollar CAD, oops, sorry. Okay, let's remove all indicators and let's start to analyze. Let's look at dollar CAD. We are looking at weekly chart right now. So for those that have not seen our analysis before, normally we'll start from the weekly chart all the way down to the H4 chart. All right. So we are looking at a upward sloping trend, very obvious. And then we are seeing a support resistance overlap. So it's a current newest support. All right, so let's look at daily. I'm gonna take, so at this moment, it's a good up. Sure. Okay, we'll look at pound dollar in a while, all right, after we are done with dollar CAD. So for the daily chart, I do see a sort of might have a triangle movement. It's what I'm currently seeing. Let's look at H4. Yeah, definitely a triangle movement right now for the dollar CAD. We just redraw this. Yeah, much better now. So we are seeing that price has been at a resistance level for a while. Let me put it here. Seemingly it's making a double top movement. All right, seems like it. However, the top is not exactly matching. The closing price is not exactly matching, but we can keep that in view. We are looking at a possible support here. Price has been tested and bounced off a while. All right, so I think for dollar CAD as of now, do advise to look at the breakouts possible, or price actually bounces off here, or it goes beyond here. So if it goes beyond, we are highly likely going for a drop, and then your entry can be here to do a sale to in conjunction. Your take profit can be in conjunction of the trade. Not trade, sorry, the trend line. All right, in conjunction with the trend line. Okay, no, sorry. Okay, so dollar CAD, that is for now. We are looking at pound dollar. So same for pound dollar, we'll be looking from weekly chart, doing a top-down approach. Downward moving trend line previously. Let's adjust this. Okay, so on the daily, we can see that recently there has been a climb. So someone is asking about the sell at this moment. So let me just take a look. We can see that there's a strong resistance over here, obviously. Let's look at H4. So let me just put it over here. Okay, so we are looking at this. It looks like there is potential for sale. However, we are looking at a very strong upward movement, actually. Hold on. This is a little bit odd. Maybe we are looking at this instead. No, not just a trend line. Okay, it looks like price has been trying to break out of this resistance at 1.23140. Wow. For me, I'll keep the trade short and sweet normally. If it's me, I would do this. Okay. And then let us use Fibonacci for stop loss, because I don't see a relevant level in the near previous prices. Okay. So technically, I would put the stop loss really close, or you guys can put in between 78.6 or 61.8. Okay, so we are looking at a potential drop down. Okay, however, I would advise probably to actually, sorry, I think I will move this. I would much prefer if price actually drop out of this smaller trend line, and then you do the entry. Okay, it's to confirm that actually we are not abiding to this upward moving trend anymore, and we are moving downwards, and we are unable to oppose this what do you call it, this resistance. All right, so we are looking at this, and I'm looking at fib retracement. Sorry, hold on. Projection, let's do projection first for our take profit. 161, I believe, because the V is much smaller here. And then I will do big retracement. 38.2, I believe. Yep, very close. And then let's look at the indicators. So for stochastics wise, it's really very close to resistance already. We are looking at it. We are also looking at a smaller downfall over here as opposed to the upward movement over here. All right, so we are looking at a potential down in sense where price is actually have exhausted all of the upward energy, and the market is looking at for a possible sell stop now. All right, so this is my take for pound dollar. What do you guys think about it, especially for the one that asked? Okay, thank you guys. Okay, if you guys have any more pairs, do keep them coming. All right, so let's actually take a look at another pair. Do you guys have a pair? Okay, Aussie dollar. Let's do Aussie dollar. Remove all the indicator and let's take a look. We are looking at a downward. I believe it's a channel. We're starting from weekly chart as well. Okay, it's a downward channel we are looking at. Previously on the weekly, we are looking that price actually came up and actually exceed the resistance of the downward moving channel. We are looking at a potential upward movement. Nothing much here. We are on the daily chart now. Let me take a look. Yeah, we're looking at upward channel. Look at H4. I think there's a channel within a channel. Okay, so this is weird. Okay, so in H4, we can consider the smaller channel. We can see that there is a movement in between right now. We can see that there is a smaller triangle movement in this case. All right, so we can see that obviously the price is in between the channel. Not the best time to actually take an action on it. All right, so for those that are in Aussie dollar right now, please take back and think and consider the price points and the patterns and the channel around. All right. Okay, so let's look at US all. Okay. Let's take a look down from weekly. I think it was bull at the start. right? Then it dropped. Okay, yeah, you are seeing a long-term short, long-term bearish. I do see it. Not up to make a trend yet. So, however, there's a support coming soon at this price level. 61.46 is a support coming soon. All right, so let's look at daily. I believe yeah, a downward descending channel. You are right. We are looking at a big time frame downward movement. Resistance over here. Let's look at H4. We have a closer trend line moving downwards. Let me see the last historical. No, not really a historical support. Hold on. Okay. I can see why you think it's bullish. You are looking at 70.32 as a short-term support, and we are going bullish until the top. If you want me to say, yes, I can agree that it is a teeny bit bullish, very short term, but we are already halfway there, isn't it? If you are looking at this downward trend line as well, then I don't think it's anything worth it to look at. However, unless we are looking at price to bounce all the way up to resistance, that I think it is something. However, I think at this point of time, the price action does not show the strength all the way to go up, actually. Yeah, even if we are looking at stochastics, we are actually almost hitting the resistance, looking at this, isn't it? Something like that. Do you agree? Or you are looking at a buy potential? Pending for reply. I set a short-term buy stop loss at 70. Short-term buy for this week. I think that's all right. That's fair. Stop loss at 70 seems appropriate. I think that's okay. Okay, so I think that's all for you as all. Nothing much, pretty much in between. For me, I wouldn't really risk taking this trade. Yeah, because even on the small time frame, I still can see that it's a very obvious downward trend. It's just that maybe in H1, this will look much better in the upward moving trend. All right. Do we have any other pairs coming up? Let's do gold. Okay, as per normal, we should always do gold. Let's look at weekly chart. Okay, very obvious support levels here. Resistance here. Very obvious V-shaped recovery pattern. Okay, we shall see where the upward movement will go to. So previously downward, now we are looking up. Let's look at daily. Still in the upward momentum, but seems to be struggling to get above 1805 as a resistance. page 4. Page 4, obvious channel. But for a very short term. Doesn't look like it's gonna do anything for us, to be honest. I would say right now, let me take a look. Is there any form of divergence? Up, down, all seems good and correct. Right. It looks like it's dropping down closer to the support, which I mean, we are looking at potential upward movement. Okay, that's pretty exciting. We are looking at let's take out our Ichimoku cloud as well. Looking at price above the clouds, very positive movement. I'm also looking at a potential to actually, there's a chance. Actually, it has already bounced off the cloud. There's a chance that we are looking at a potential buy-in. All right, I think can do 2. All right. If it goes above the weekly daily resistance for near historical pricing, then we can do a second buy entry in addition. If not, this will be your potential take profit. All right, so this is something to consider. Obviously, in this case, I will keep my stop loss absolutely close. All right, so we are looking at something like this. Not the best risk to reward, it's about 1 to 2.5. All right, but it could do better. All right, so we can go, let's take out our Fibonacci. $78.6 is for the second entry. 61.8 is your take profit. 61.8 your buy entry and 78.6 for your stop loss. I believe it's 78.6, no, 61.8 for buy entry as well for retracement. So we are looking at many possibilities for this. All right, so for the second buy entry, you can do a very short one, or you can go all the way up to 1828. All right, for gold. So I feel that there's a lot of potential. You can look at it and you can add on to your amount. All right. Okay, I think we can do one last pair. If you guys have any, please write them down on the Q&A section. If not, we'll do one last one in silver. Let's take a look on the weekly movement. There's a resistance and support. We are also looking right now at a downward moving, downward moving trend line. Looks like price has been going up for a while. Looks like it's going to hit the resistance and come back down. Let's look at daily. Yep, seems like it. All right, daily not showing much. We're looking at page 4. Okay, personally, I would put maybe sell a bit higher actually. following the big trend, the larger time frame trend of it dropping down. Sorry, my screen keeps turning black. Okay, so let's look at Fibonacci retracement for this. So looking at 61.8 for take profit. I don't see any historical levels for my stop loss, so let's also make use of the Fibonacci. Yep, so for me, I will put my stop loss really close, just right above 78.6. Seems a bit crazy, but I think what I'm trying to say is that it's okay. So basically my theory is based on this downward moving trend line as well. So if price actually really did exceed this much all the way to stop loss, then highly likely we are looking at upward trend and our analysis is wrong, right? So let's look at a downward movement. And then let's take a look at take profit is at 100%. Okay, so this is what we are looking at. Obviously, if you are looking at Ichimoku cloud, it will look like it's still above. All right, so in this case, Ichimoku cloud is very lagging as well. So however, if you're looking at stochastics, we are already on the drop. All right, so we are looking at this resistance level and we are ready to drop all the way down. All right, this is for silver. Do we have any more questions to be answered? Okay, so in slides, risking by trade. Yes, correct. So if you're risking 1 to 2% for each trade, 5 trades will actually mean that you're risking 5 to 10% of your whole capital. Yep. Any more questions before we end this webinar? Shouldn't put more than 5% if not experienced trader, right? Actually, it depends on how you view analysis. Like I said, if you are a swing trader, highly likely you will have higher risk to rewards. You can have more than one trade. I feel that even if you're inexperienced, it's okay to have 5 trades, 8 trades, etc. But I feel that it has to be relevant analysis and analysis that you actually believe in and not that you are chasing the trend. All right, so it has to be analysis that is based on all of your check boxes, like, oh, I'm following the trend, or this indicator is telling me this, I'm using the price action, is at the resistance or support level, right? Everyone has their own checklist when you're doing analysis. So if those trades actually checks out your checklist, then I would say that it's okay to have more than one trade, even if you're inexperienced, or 5 trades in this questions matter of fact. All right. Because I feel that even yes, 5 trades, it could be risking 5 to 10% of your capital. However, I believe that it shouldn't all go wrong at the same time. All right. If they do really all go wrong at the same time, it's time for you to actually take down what went wrong in your analysis and why did it went wrong. All right. So I think it's fine even if you're inexperienced. All right. Okay. Do we have any more questions? Okay, so I think for now we do not have any more questions. Thank you very much for attending this webinar. Hope to see you guys again next week. All right, thank you. Bye-bye.